Hello everyone, welcome to the Alpha Hustle. Here is a weekly analysis of Nifty and Bank Nifty on how market auctioned last week with important references and potential scenarios that may likely to play out in the indices next week. So let's quickly get started.
Alright, so let's start with the review of Nifty. What a fantastic bull run that the Nifty is having here. There was a little pause during these couple of months where the higher time frames started reaccumulating their long positions, and eventually we got a breakout in the month of May, stopping the one time framing to the downside and starting the one time framing to the upside and getting a close at the all-time highs. We are currently having a continuation during the month of June where the market is continuing the one time framing to the upside. So it is interesting to see whether we could tag the next psychological reference of 16,000. So the trend for the longer term time frame is to the upside. So as we discussed in the prior weeks, we have an 18-week balance where the sellers earlier tried to probe below the balance low and failed to get a follow through to the downside. So this resulted in buyers taking the control of the auction towards the upside and the retest of the balance high. Last week, we saw an open and breakout above this 18-week balance, suggesting that we're likely to kick off a markup phase to the upside. However, I would wait for a week or two just to get that confirmation and see that we are clearly getting accepted above this broader balance. So the expected scenario is that the market starts to accept above this balance and head higher. In case if the buyers fail to get a follow through and fall back into this balance, we are likely to have the sideways choppy price action that we've been having for the last 18 weeks to continue within this broad trading range. However, the trend is still intact, the structure is still intact, and the buyers are in the control of the auction from an intermediate term time frame perspective. One of the concerning factors that we've been having all around are the volumes. So the volumes that we've been having during this up move are really bad. However, this is not due to a lack of strength by the buyers in having this up move, but this is a resultant of the new margin rules that we have that the SEBI has introduced. It is going to be the new normal, so we'll have to get used to it, but we'll let few weeks pass for these volumes to settle and understand what the average volumes are going to be going forward. So in terms of the daily charts, the structure of higher highs and higher lows has been reinstated, and it has been a fantastic rally ever since we have taken out the psychological reference that we had at 15,000 and 15,050. The rally is kind of getting a bit overstretched right now and probably may head towards forming a lower high before heading higher. Keep an eye on it. It doesn't mean that we'll have to short the market right away, but be cautious, and the structure of the market has turned from selling the rallies to buying the breaks. So in case if you find any dips, is a good opportunity to step in and buy into the market as long as the structure is intact from a short-term perspective. As we just talked about, the volumes have been really pathetic over the last few weeks, but I would let situation settle down. So in terms of the trading ranges, we have a nice gap here, a continuation gap near 15400 zone, which will act as a base for the current trend that we are having. So any pullback towards this zone is a nice trading opportunity in case if it holds. We'll understand the different scenarios when we talk about the market profile charts, but understand that the context is now in favor of buying the breaks as opposed to selling the rallies and getting caught on the wrong side of the market. All right, so now let's get into the market profile charts. So during the prior week, what we had is pretty much of an overlapping up move. As you can see, the ranges are pretty narrow, and especially the value areas are kind of overlapping to each other. So this is a slow grinding move that we have to the upside. But what changed the context during last week was this continuation gap that we had at 15,375 and 15,420. And this gap was held during the rest of the trading sessions last week. So the market opened with a gap and tried to balance above the gap. On the subsequent day, market opened pretty much flat into yesterday's range, where the sellers tried to attempt to fill this gap where they failed to get a follow through. So this resulted in continuation of the auction to the upside. We kind of formed outside day with one time framing to the upside and eventually getting a close towards the all-time highs. So this is a strong auction by the buyers. On the subsequent day, we got a higher opening again where the market tried to balance and all the breaks that we've been getting into the previous trading ranges have been brought into. So the one time framing to the upside continued until the 1st of June. However, on the 2nd of June, we have a really interesting day here. So market opened back into the prior day's value area and the range where the sellers tried to probe below the previous day's lows, which they eventually did. But what happened for them is a lack of a follow through. So an ideal scenario of buyers stopping the one time framing to the upside and starting the one time framing to the downside is getting a follow through. The lows are quite mechanical in nature. As you can see, the buyer stepped in right at the highs of the 28th of May, confirming that we have the daytime frames that are actually controlling the market right now. So this remains to be a weak low to be monitored going forward. So the lack of follow through to the downside resulted in the buyers taking the control of the auction towards the end of the day. So this resulted in the short covering or mean reversion back towards earlier point of control and the high volume node on the previous day. On the subsequent day, again, we had a continuation to the upside, a nice follow through to the close that we had on the earlier day, suggesting that the buyers are still in the control of the auction. However, yet again, we had a balance here. Again, the lows are pretty mechanical in nature, which is few ticks away from the highs that was made on the 1st of June. So again, more of a confirmation that we have daytime frame traders in action, leaving a weak low yet again. So the market is kind of dominated by the daytime frames. So that being said, what are the potential scenarios that may likely to have for the next week? So in case if we are getting a follow through to the upside, so for now, 15,750 is the current week high, which will be an important reference to watch out for the next week. So if the market starts to find acceptance above the current week high, we are continuing the auction to the upside by one time framing to the upside. In case if we start to kind of balance within this zone, which essentially means that the buyers are getting exhausted right now, and we may potentially have an inventory adjustment of week longs before heading higher and taking out this weekly reference. So I would break to three different trading zones. So zone number one is obviously the balance that we had on the 20th of May with a gap below. So this gap is likely to act as a support. And this is the zone number two, where the market spent majority of the time during the last week. So a balance followed by a balance and then a small balance and a spike towards this balance. So if you kind of merge all these three ranges together, you would get some sort of a HVN. And in case if you were to find acceptance, we are likely to head for the retest of this week lows that we had at 15,500, where I would expect the buyers, especially from these single prints and this gap, to kind of defend 15,500 and push the markets higher in case if the markets were to fall below 15,500. So that's where the sellers may attempt to retest the demand within the single prints as well as the gap before heading higher. So the context is simple: buy any breaks that we get to these important references or the trading zones. So buyers are likely to come in at all these breaks that we would get within the markets. So the trend on all different time frames is to the upside. So you would be better off buying the breaks. All right, so let's now move on to the Bank Nifty. So unlike Nifty, Bank Nifty is kind of on the slower side, struggling towards these selling tails that we had during the months of Feb and March. Though we stopped the one-time framing to the downside and started one-time framing to the upside during the month of May and having a follow through right now in June, there is clearly a struggle that's happening near the 36,000. It is important for the buyers here to absorb all the supply coming in and hide higher and retest the supply that we had during the month of Feb. So in terms of the weekly charts, we are back into this balance from where the down move has been initiated. So the expected scenario is that the sellers to step in when prices are coming back into this zone. And currently we are at an important reference of 36,000, which is likely to be the HVN or the composite point of control for this broad trading range. So it is important reference to watch out for the buyers to take it out on the upside to head higher and tag the balance high. In case if there is a fallback, then the important reference to the downside is a balance low of 35,050. So in case if you're kind of getting rejected and start to find acceptance below 35,000, so the longs, especially that entered here, should be very cautious. But the trend is clearly to the upside. As you can see, we started one time framing and continued to one time framing for the last 3 weeks. So the only concern at this point is a kind of overlap that we've been having for the last couple of weeks. So probably this is more of an exhaustion coming in, running into this reference of 36,000. So it is important for the buyers to take this zone out as soon as possible. Okay, so in terms of the short-term charts, as we looked at in the weekly chart, so there has been a lot of overlap that's going on off late for the last couple of weeks. This is a clear exhaustion that we are having by the buyers, so it is important for them to absorb all the supply, which is expected, as we talked about, especially in this zone. As you can see, these days are dominated by some strong hand sellers that led the market to the downside. So it is expected that the supply is likely to come in, which eventually did, and the buyers are trying to absorb that. So the expectation from the buyers is to continue absorbing the supply and give a spike towards the upside. Okay, now let's move on to the market profile charts. As we looked at the daily charts, so what we are having is a story of balances here. So market is pretty much balancing within two different trading ranges. So let's consider this as a balance one and this as a balance two. So during the prior week, we had a balance for 4 days from which we got a breakout. But what happened was there was no follow through, a strong follow through to the upside. Market started to pretty much chop around near this balance high, where continuously the sellers have been attempting to push the prices back into balance one. However, they are not quite successful in getting a close back into this balance. So as you can see, there was an attempt here back, pushing the prices back into the balance, failed, get a closing above the balance, tried to push below, push into the prior balance, failed, and a close above, tried to push here on the 1st of June, failed to get a closing, tried to push yet again on the 2nd of June, failed to get a closing. So the story continues. So the similar situation happened on Friday too, where they tried to probe, buyers came in and got a closing back above. So this suggests that the market is dominated by the day time frame traders. The interesting aspect that we had an outside day, which gives an early sign that we are clearly having an exhaustion, especially near the 36,000 zones. So the market kind of approached the 36,000. Responsive sellers came in that pushed the market slower. So now we are back into this balance. So we are likely to continue within this balance. In case if the market starts to find acceptance back above 35,800 and within the 36,000, and then probably we may get a spike to the upside. So in case if the buyers are not doing it really quickly, then we are likely to see a scenario of all these buyers who have been trying to buy the breaks exactly at the same reference levels, right? So we got some accumulation here, accumulation here, accumulation here. So all these buyers are likely to panic with no follow through to the upside. So if the market were to reverse from here and start one time framing to the downside by taking out Friday's low, we're likely to see some panic around these buyers, especially to start off with the buyers 35 to 35,050 zone. In case if we get a follow through to Friday's low, we are likely to head for a retest of 35,000, 35,050, below which we are likely to head for a retest of the poor lows and the weak lows that we had at 34,450. But from a broader perspective, we are still in a range, I would say a 1,000 point range. Keep trading where the balance rules are applicable. So as long as the market stays within the balance, it's likely to chop around. We had some struggle going on near the 36,000 zone. So if the buyers are successful in able to take out 36,000, we may open up a short covering move towards 36,500 and 37,000 level. In case if the buyers aren't strong with continuous failures towards the 36,000, where we are having an inventory adjustment of week longs right now. So if the buyers are back in the game, we may see a retest back towards 36,000. Else, all these buyers who bought these breaks at the exact visual references would be in danger. So that's all for today. I hope this information has been helpful. If you found this content useful, please do like, share, and subscribe. Have a nice weekend and a nice trading week ahead. Thank you.